Hi guys, welcome to this Money Control live stream. You're watching Morning Trade with me, Nandita Khemka. Lots of cues to watch out for today. We have a new IPO opening as well, and cues from global markets coming in are pretty mixed this morning. And of course, we'll also be getting all your stock-related queries answered on the show. So if you have any queries, send them in to us on our YouTube feed, and we will take them up. But before we go any further, let's take a look at the top headlines at this hour. Well, it's a mixed close on Wall Street. The S&P 500 snaps a 4-day losing streak. The Nasdaq surges over 1.5% to mark its best day in August. But the Dow closes marginally in the red. Meanwhile, the 10-year Treasury yield surges to 4.34% and is now at a 16-year high. Asian markets trade largely higher, while the Gift Nifty is implying a flattish start for the Indian market. Brent crude settles above $84 a barrel, pairing early gains as hopes of better demand from China fade. Meanwhile, gold trades near a 5-month low as rising treasury yields weigh on prices. Among stocks to watch out for today, Union Bank launches a QIP of up to 5,000 crore rupees at an indicative price of 86 rupees 55 paise a share. Reports suggest nearly 30% equity in SJS Enterprises will change hands in a block deal, with Evergraph Holdings set to sell up to 29.5% stake today. Well, let's first bring on board our technical expert for today, Sacchitanand Uttekar of TradeBulls Securities, joining in this morning. Good morning, Sacchitanand. We saw a very good rebound coming in on the markets yesterday, even despite a quiet open. 19,400 almost there. Do you think this support zone now being crossed, we can see levels of 19,500 to 600 this week?
Good morning, Nandita. Nandita, I think the bias for the market still remains, neutral to positive. Only it changes once Nifty starts, trending below that 19,160 mark. I think that is the base of the ongoing declining channel within which it has been oscillating. But if you look at the entire range, it is still confined within previous Monday's trading range, which is still set at around 19,480 on the higher side and 19,260 on the lower side. So probably we may see Nifty continuing on this consolidation mode for another few days before eventually we see a breakout. But I think the crucial resistance at 19,500 would be something that we need to watch out for. Once we have an established closing about the same, we may see some very strong directional momentum play getting back into the markets. But as of now, if you look at the overall texture, we have the Nifty mid-cap indices, which are still trading near their life highs. We have Nifty 500, which is almost near its life highs. So probably the stock-specific market should continue. There is an evident pressure which is seen in Nifty Bank. We still believe that 44,500 remains a very strong resistance for when it comes to Nifty Bank. And on the lower side, the support at 43,700 looks very promising. So net, I think both the indices could remain consolidative. We are not of the opinion that there could be a sharp sell-off in the market. On the contrary, we are expecting that eventually we may see both the indices trending higher. So for the day, I think 19,480 could be an important cluster of resistance. But on the lower side, 19,300, 360, could be an important support. So the bias remains positive, and we are focused on stock-specific action.
All right, focus in on stock-specific action. Hold that thought, Sacchitanand. We'll come back to you and discuss specific stocks. But let me also get on board our next guest for today, Anand Tandon, who's an independent market analyst, joining in this morning. Good morning, Anand. Good to have you on the show. Over the last 1 month, we've been stuck in a very tight range, 19,400 to 19,600. Would you expect this consolidation to continue, given the fact that the factors have turned a bit negative when it comes to FII flows and, of course, inflation, when, even globally, the Fed indicating that it's not really done with its interest rate hikes just yet? Where do you expect the markets to head now from here?
Well, I think there is no particular trigger for the market either way. The domestic market is doing reasonably well. The earnings have been decent. On the other hand, as you mentioned, the global macros are now turning a little negative in terms of the interest rates. Expectations that interest rate hikes are done is unlikely to be holding true, and therefore you would likely to have a situation where, at least for the near term, either there will be an uptick, or even if it is held, it will be longer than what people expect. In that context, neither can valuations go up nor can earnings, because there is also a kind of tapering off of the consumer demand. If you look at what is happening in China, already we are seeing a serious weakness in the economy coming through there because of the real estate. And now increasingly in the US also, there are some signs that, there is some amount of pressure. We've already seen commercial real estate cracking quite sharply in the US. And there is also some amount of tapering off in consumer demand. In India, consumers have now reported numbers in terms of credit, which is fairly startling. I mean, for the first time, credit outstanding in terms of credit card spend has crossed 2 lakh crores in terms of the loans. And consequently, the consumer here is also getting fairly leveraged, which leaves very few sectors which have kind of possibility of sustained growth in terms of earnings or demand in the next few quarters. Consequently, we are somewhat stretched on the valuations, not enough for it to crash, not enough on the positive side for it to make a huge rally one way or the other.
Right, Anand, I also want to get in your thoughts on the auto pack. On a YTD basis, it's done pretty well. We've seen autos, race ahead in terms of other, sectoral performance. But over the last 1 month, it has lost a bit of steam. But, all those EV-focused stocks have been in focus. The likes of JBM Auto, Electra, they have been auto ancillary stocks, of course, which have been jumping quite a bit. Do you like anything when it comes to the EV space now at the current juncture?
So on the EV space, if you look at the consumer-led kind of businesses, the two-wheelers, the listed companies are not offering you a great entry point. Also, the one key thing to note in terms of EV is that the leaders there are still are yet to be sorted out. I mean, lots of companies are coming up with new technologies and new introductions in the models. And consequently, the ones that will become really popular are still not very clear. Importantly, there is still some element of subsidy one way or the other in many of the EV purchases and sales. And as a result, if you see what happened in China, once they removed some of the subsidies, the older EVs have suddenly been dished because of the fact that their range, for example, was about 100 kilometers per charge. Now you're getting EVs which are almost 2.5, 3 times that much, and consequently they don't have much use. So EV movement itself is going to create new leaders, and we don't know yet which ones they are. Betting on the existing ones becomes a problem. The ones that you mentioned, JBM and so on, for example, are mostly meant for public transport. And that is also being driven largely by government orders. Right now, the government has announced 10,000 new buses that they want to kind of partially subsidize. Here again, the question is that so long as the central government is pushing it, you will get an order flow. Most of the state government road transport corporations don't have ability to pay for anything. And they are financially very weak. And consequently, it's very unlikely a bus, for example, an EV bus costs about 3 times or 4 times that of a regular bus. A regular bus may cost you 30-40 lakhs. An EV bus will cost you upward of 1.5 crores. Clearly, the economics doesn't necessarily work at this stage. So I would still hold my horses as to where EV goes.
All right. I also want to get in your thoughts on the IT pack. We are witnessing buying coming in at lower levels. Of course, we know that earnings, in terms of earnings, it was a big disappointment, especially given the fact that Infosys came up with a howler of a guidance. But would you be a buyer into IT stocks at these levels for the long term? Because this entry point, of course, is something that some market participants believe that it offers a very good entry point, at least for the long term.
So broadly, I don't think there is any compelling reason to be buying any of these stocks. However, that said, from a portfolio perspective, I think it is a good place to be because it is not overly owned. In fact, most funds would be underweight on this. And two, we have already been, the factor is already factored in the slowdown that one is witnessing. With companies like Infosys guiding for 1% or so earnings growth. I mean, top line growth. What do you expect in terms of earnings growth? And that kind of situation, you are already having a company which is trading at between 80 and 22 times 1 year forward earnings. That doesn't leave much scope for upside. But on the other hand, this is now known and discounted in the market. And the question is, how quickly can the consumer side, the demand side recover? So we are looking at larger companies, frankly, from the point of view of takeout deals and cost consolidation, vendor consolidation. That is a trend that's happening globally. There are smaller companies which are kind of thematically aligned, either let's say with cloud or with for example, EVs, as you mentioned. Some of those companies are doing quite well, but they are quite expensive compared to what the global peers are. So from a portfolio perspective, IT, yes, I think you need to at least go somewhat neutral on it. And therefore you should be having it in your portfolio. Will it make you large amounts of money right now? Well, if the market turns negative, it's likely to outperform. If it turns usually positive, it is unlikely to give you a great upside.
Right. Before I let you go, Anand, one top theme that you would recommend investors to look at this juncture, especially when the markets are stuck in a tight range?
Well, if you are looking at slightly drawn out numbers, there are only two areas which are doing well in terms of earnings reportage, and the one will be the banking and finance sector. And there are various sub-segments in that, insurance, asset management, and so on. So it depends on whether you're focusing on the asset or liability side. And the other is, of course, the capital goods sector. Unfortunately, most of the capital good companies, and there are very few, are very expensive. And while we see a multi-year kind of demand happening for them, and therefore the top line will continue to grow for many quarters, much of that is already in the price. So which brings you back to boring old banking. I would think that if you look at some of the larger players in that segment, where you can expect to see the nominal GDP, let's say, grows as 11-12%. Most of the larger players will grow faster than that. That means if you assume that 14-15% kind of growth rate, 5 years, you will double your balance sheet. Assuming that you are able to manage your credit risks, you are going to have fairly strong earnings growth on a compounded basis. So those which are facing near-term issues, because of change of management, because of amalgamation and so on, some of those companies may be something that you might want to hold on to, not because anything great will happen in the next 3 quarters or 2 quarters, but because over the next 5 years, you will still expect to see them double.
All right, that's the view coming in from Anand. Then Anand, with that, we're running out of time. Thanks a lot for taking out time and joining in and sharing your thoughts with us. It was a pleasure chatting with you. Well, with that, let me get back to Sacchitanand and talk about specific stocks. I want to first get in your thoughts on the stock of the day, Union Bank. QIP to raise 5,000 crore rupees has opened. The stock was down somewhere around 2.5% or thereabouts yesterday, but it is very close to its 52-week highs. What should the strategy be when it comes to Union Bank for the next couple of trading sessions?
If you look at the major structure, the structure still remains positive, but there are intermediate, resistance zone which are placed somewhere close to around 100. So unless we don't see a firm breakout about the same, there may be some supply pressure which could be evident. Even yesterday we saw some selling pressure which almost took out 3 days of its up move. So the immediate level to track on the lower side from a support perspective is resting somewhere close to around 86. So we may see some more selling pressure here, but eventually the major structure is still promising. The rounding bottom formation is exhibiting a target price somewhere close to around 130, 135. So on a decline, this particular stock can be accumulated in one's portfolio. The major stop loss should be placed at around 82 on a weekly closing basis. And we may see an eventual move towards 120, 135 in next couple of months.
All right, that's the view on Union Bank. Then let me take up some viewer queries that are trickling in this morning. I want to begin with this query on Saxoft coming in from Debu K. Wants to know your thoughts on this stock. And this stock has been gaining momentum up somewhere around 8% or thereabouts over the last 5 sessions. Yesterday, though, it came under a bit of a selling pressure. But what are the kind of near-term targets one should be watching out for on a Saxoft?
Nandita, I'm really sorry, I don't track this particular company.
No worries. Let's also talk about some other, stock that is on my radar. That's the Adani group of stocks. There is a query coming in on Adani Transmission, but I also want to get in your thoughts on Adani Enterprises, given the fact that promoter entity has increased stake in the counter by 2.2%. Adani group of stocks has, have been witnessing a good uptick over the last few sessions. How would you trade into these particular stocks, Adani Enterprises and Adani Transmission?
We have been biased on this. Our bias remains on the positive side. especially when it comes to Adani Enterprises, we are trading some long positions here. On the higher side, we are expecting this particular stock to eventually scale towards 2800, and that's why we continue recommending long positions here with a stop loss somewhere close to around 2620. When it comes to transmission, it is forming a certain base here. The support at around 800, 730 has been well established, and probably we may see some very strong elevated moves going forward. So the immediate level that one should watch out is somewhere close to around 1030. Once this particular mark is crossed, the stock may surge towards 1380, 1390 kind of zone where its 200 weekly exponential moving average is placed. So as of now, I think the worst for these particular counters is behind, and we may see some strong momentum play moves, getting unblocked in the days forward.
All right, that's the view coming in on Adani Transmission. Then, we had a query coming in on this particular stock from Saurabh Singh. Hope that answers your query. But let's also take up a query on Glenmark. Maheshwar Bhanu wants to know your thoughts on Glenmark Pharma and Glenmark Life. If you look at Glenmark Pharma, Sacchitanand, over the last 6 months, it has rallied, a phenomenal 70% or thereabouts. But off late, it has come under some bit of selling pressure. And looking at Glenmark Life, yesterday it was pretty upbeat, somewhere around 2.5% up or thereabouts. How would you advise investors to trade into these two stocks now?
Well, both the stocks are showing diverging trends. When it comes to Glenmark Life, clearly the consolidation looks healthy, and probably we may see a breakout, shaping up soon, which may push the stock eventually towards 740, 760 kind of a zone. The clear-cut evidence is a bullish flag formation, which is exhibiting this particular target. So one should continue, with an accumulation mode. Any declines towards 630 should be utilized to add on 580 on a weekly closing basis, and we may see an eventual move towards 740. When it comes to Glenmark Pharma, as you rightly said, the stock has been under pressure. We saw a double top kind of formation at around 830 levels, and post that we have seen a very gradual decline. Now, if you look at the daily structure, we have a bearish crossover on its 5 and 20 days exponential moving average, which is not a healthy sign. So probably, the stock may see some further slippages towards 740, 735 zone. And eventually that 800 resistance could be important from August expiry perspective. So until unless this particular hurdle remains firm at around 800, we may see some continued pressure in this particular counter, which may lead it towards 730, 740.
Right, that's the view on the Glenmark twins then. But, I want to get in a query on Praj Industries. This is coming in from Meet Jetli. Wants to know your thoughts on this stock. Has been, picking up momentum. Yesterday, it was up 5%. Over the last 1 month, it is up somewhere around 20% or thereabouts. 500 rupees on the charts at 52-week highs. What is the next level one should be looking at on the higher side?
We are expecting price targets of somewhere close to around 560 on an immediate basis. Now, recently, the stock displayed a very strong breakout from a rounding bottom formation, wherein its leg line was placed somewhere close to around 460. If you look at the structure, there are no signs of any exhaustion here. The daily RSI is still comfortably trending higher. We still don't have any signs of a negative divergence here. Even if you look at the weekly structure, though the RSI is placed somewhere close to around 80, there are no signs of any divergence. So probably, this particular breakout that we have seen recently could push the stock price higher. So on an immediate basis, we may see this rally getting continued towards 560, and hence still building long positions could be a prudent idea. The stop loss should be placed somewhere close to around 485 on a weekly closing basis.
All right. Hope that answers your query on Praj Industries. I want to take up a query on Axis Bank. This one is coming in from Shweta. Wants to know your thoughts on this particular bank. Now, I think over the last 1 month or so, it has been stuck in a range. So, would you say that the stock is headed higher from here? And if yes, what are the kind of targets one should be watching out for on this one?
Nandita, since June 2023, the way the price action has been confined within this particular range, this probably looks like a broadening formation with the base well established somewhere close to around 930, 940 kind of a zone. Recently, we saw, this particular base getting respected, and the rally in the last 2 days has been very significant. In fact, on the higher side, we are tracking this particular resistance at around 960. Probably, we may see an extended move once this particular level is, breached in this particular week itself. The entire pattern structure is exhibiting a price target somewhere close to around 1,000. Now, this particular price target will be activated once the stock starts, trending confidently above that 960, 965 zone. So I think the bias for this particular stock remains positive. One should keep trailing the stop losses higher. As of now, the base at around 935 looks very promising, and from a trading perspective, 940 can be a very dependable, support base wherein trading stop loss can be, elevated. We will see 965 kind of a level in a day or so.
All right, that's the view then. But, this wraps up our query segment for today. But before I let you go, I want to ask you your thoughts on SJS Enterprises. SJS Enterprises, there will be a block deal in the counter. Sources suggest that, Evergraph Holdings will sell somewhere around 30% stake in this counter. And the floor price for the block deal is at somewhere around 580 rupees per share, which is at an over 6.5% discount, to the current market price. 620 is where it's at right now. What kind of downtick can we expect in today's session, given the fact that this large block deal is happening at a discount?
Well, the trend for this particular stock has been positive. The immediate floor is placed somewhere close to around 575. So I think in case of a decline, this is the first level of support wherein the selling pressure could be absorbed. On the higher side, the immediate resistance is very clearly set at around 660. So the moment we see a breakout above that 660 mark, we may see the resumption of the up move. So as of now, I think it's better, to keep your stop losses somewhere close to around 565 on a weekly closing basis, and any declines towards 580, 575 can be utilized to add some long positions.
All right, that's about SJS Enterprises, but we're running out of time. Sacchitanand, before I let you go, stock recommendations for our viewers this morning?
Two stock ideas, both on the long side. The first one is LTIMindtree. Now, if you look at the sector performance, the IT pack still gives a lot of confidence and conviction here. If you look at the structure here, LTIMindtree has been oscillating within this 5,200 4,000 band for the last 1 year almost. And if you look at the monthly RSI, it has registered a swing breakout in this particular current week itself. If you look at the daily chart structure, we clearly have evidence of a bullish hammer followed by a rising three formation. So we are expecting that there could be a major range breakout soon, and that's why we are expecting levels close to around 53.10 on a positional basis. And we are recommending building long positions here with a stop loss at around 51.10. This stop loss has to be maintained on the closing basis. The other stock idea, wherein there is a clear-cut flag breakout on its daily and weekly scale as well. Tata Power has been in a very strong bullish trend. Yesterday itself, we saw some very strong OI additions here. The sector itself has been attracting a lot of inflows. So we are expecting this particular rally to continue towards 255 eventually. And that's why we are recommending building long positions here with a stop loss somewhere close to around 234.
All right, LTIMindtree and Tata Power, two recommendations coming in from Sacchitanand. With that, Sacchitanand, thanks a lot for taking out time and joining in this morning and addressing all of your queries. It was a pleasure speaking to you as always.
Thank you, John.
Well, with that, we've come to the end of this edition of Morning Trade. From the entire team, thanks a lot for watching, but don't go anywhere because coming up next is Opening Bell.
How do world leaders view India?
I've long believed that the relationship between the United States and India is will be one of the defining relationships of the 21st century.
The bright spot of the global economy.
The growth rate for India, which is 6.8 in 2022. Let's not forget, this is one of the bright spots in the global economy right now, such a high growth rate.
The potential of India is enormous, and you have now a reformer, a radical reformer, who has the ability to transform it.
On the verge of a big transformation.
इस अमृत काल में हमारे संकल्पों की सिद्धि हमें आजादी के 100 वर्ष तक ले जाएगी.
A magnet for investment.
I'm actually incredibly excited about the future of India. I think India has more promise than any large country in the world.
The world is bullish on India. Money Control is bullish on India. Join the campaign. Tweet to us with hashtag MC Bullish on India.